Welcome back. In this lecture we will talk about the 5 steps of the accounting cycle by making use of graphics. Let's start with step 1. Step 1 was about identifying transactions taking place in a business on a daily basis. Then we moved to step 2, which is about recording those transactions, and the way we do so is by entering what is known as journal entries. We also used T accounts. The T accounts is a visual version of journal entries. It's exactly the same thing. We still post the debit and credit, but we use T accounts for a better visual identification of the journal entries. Then we moved to step 3. Step 3 is about pulling out all the closing balance of each sub-ledger and put them in a list. So we will have the closing balance of customer ABC, from bank, for sales, and so on. And we will put them in a list, which is called general ledger. So the general ledger will only show the closing balance, whereas the sub-ledger here, the T accounts, will show each individual transactions. Then we moved to step 4, which is about building a trial balance. As the name suggests, the trial balance will make sure that the total of all the debits equals the total of all the credits. So here in step 3, we had a list of closing balances, which will be both debit and credit. When we build up the trial balance, we make sure that the total of the debits equal the total of the credits, and that's the purpose of the trial balance. And finally, we move to step 5, which is about building up financial statements. So what we will do, we will take all the closing balance sitting in the trial balance and allocate them to the appropriate financial statements, which will be the income statements, the statement of financial position. So what we've done here, it's visualize the 5 steps from 1 to 5 of the accounting cycle in a very simple version. So we see here we have transactions, we have sub-ledger or T accounts, which is the same. Then we have a general ledger, which is a list of the closing balance. Then the trial balance will allow us to make sure that total of debits and credits balances, they are exactly the same. And then we use those balances to build up the financial statements. So that concludes the accounting cycle. Thanks for watching, and I look forward to seeing the next sections.